Greetings everyone, Joseph James here with your nightly newsletter brought to you by theschooloftrade.com. Today was July 28th, 2009. Tuesday morning here, guys. A very slow Tuesday here as we get our way through this summertime chop. Now, before we talk about our trade results for the day, I want to remind you guys we have a great free resource online. Make sure you check out our YouTube page. That's youtube.com/School of Trade. And please, guys, take a moment to rate and comment on those videos. Now, today we took $210 out of the market today. Now, trading decisions early in the day led to us being in the red a little bit earlier than we'd like to. We slowly clawed our way back out, though, taking some high probability trades, and we ended up in the day $210 here. That puts our weekly total to 420, our monthly total here in July at 6,600. Now, today's term of the day is your stop strategy. What is a stop strategy? We all know we all need initial stops, right? We all know what a stop loss is, but what is a stop strategy? Well, this is a mechanical system of managing your initial protective stop order. So it's what to do with that stop. It should remove the emotions from your trade management. As you know, emotions are one of the most important things that we need to identify, address, and conquer in our trading. And a stop strategy, when used properly, right, it's going to remove those emotions from how you manage your trade. So get the greed and the fear out of this equation and allow you to stay strictly based on the statistical analysis of how your stop needs to be traded. It needs to have a proven track record of being consistently dependable. So this stop strategy should not be something that you just make up out of thin air. It needs to be consistently dependable. It also needs to be simple, easy to follow. It needs to have different options for different markets and different market conditions, and also make sure it can be easily automated, such as with NinjaTrader, like we use in the room. Okay, our stop management is moved automatically for us, right? We don't do any of that ourselves. It's all set up prior to taking the trade, and it's executed automatically for us. So again, it needs to be simple and easy to use. So we want to make it automated, remove the emotions, so we don't need to be thinking at all about money, losses, profits, and how to manage our stop. Okay, now a good example of this stop strategy would be here if we entered the euro long at 1.4000. Our protective stop could be 5 ticks behind, right? So 39.95. We, of course, are going to use 3 profit targets to scale out of our trade. Now, of course, this is just an example. These aren't exact numbers. But a typical stop strategy would be that as first, once price fills your first target, in this case at 5 ticks, it will then move that stop from 5 ticks back, so 5 ticks of total risk. When it hits your first target at 5 ticks, it will move it all the way up to your point of entry. This, of course, is going to eliminate all of the risk on this trade. Now, at the second target, right, when the price fills the second target here, you could then move your stop up to entry plus 5 ticks. Okay, so to lock in profit. Guarantee that this trade is going to go home a winner. And then last but not least, we're then going to trail your stop using a very simple technique we use with the James Wave that will maximize your long-term gains. So of course, the way that we manage our stop, that is our stop strategy, and as you can see, it can be as simple as this, but it can also be a little more complicated as well. For more information on how we use our stops and our stop strategy, okay, come join us tomorrow morning in our live trade room. Opens up at 2:45 a.m. Guys, the beginner's course is highly recommended for all free trial members, so pick up a copy of that. It's open tomorrow at 2:45 a.m. for trial members and lifetime members, so come out and join us. We'll trade the European session as well as the U.S. session. We'll close down about noontime Eastern Standard Time. We have 3 jobs, and that is to identify the news events, adjust to those news events and adjust to the market that we see, and then execute our trades with patience and discipline to wait for the highest probability opportunities. We stop thinking so much, guys, right? We let our rules do the trading. Let's talk about some of the trades we took today. Now, as I mentioned before, I didn't make all the, well, kind of lacked a little bit of discipline this morning. We had come off a great end of the week last week, got caught up in a couple trades here. Now, of course, the first trade of the day here, as you can see in the DAX, we'll zoom in here for you. Just before 3:30 here, we looked for a wave long. And of course, we disqualified this wave long because of a well-defined pattern, which we call the stutter step pattern. Of course, when a wave long fails, a 2-step short prevails. And of course, at 3:30 here, we took a DAX 2-step short at 74, got our 4 ticks, moved our stop to entry, and got bounced out of this trade. Now, one of those great trades here where it's an excellent example of how effective it is of actually our stop strategy. Remember we talked about that earlier, the stop strategy. Well, our stop strategy here basically ensured that this was a winning trade and not a losing trade. It didn't allow me to get emotional. It didn't allow me to play with my initial stop. It moved it automatically so that, as you can see here in this snapshot, Right, price came right back up against us after we got our first target filled. So if I wouldn't have trailed my stop, I wouldn't have had a mechanical stop strategy here, I would have most likely given all of this money back and some to the market. So rather than being a winning trade, without the right stop strategy, this could have easily been a losing trade. Now, of course, the 4 ticks that I made here at 330 pretty much gave it back about 8 minutes later. This is a 2-step short here at 86. Had to get out early of this one at -4 ticks per contract. So on 3 contracts, that's 12 ticks here. What happened in this situation was we were waiting for price to break below a specific level of support. When it did, we got short. But what happened was moments after we got short, price quickly reversed in our face, went and held above that level of support, and then we saw a bunch of buyers jump on in support of that level, which caused price to flip up and head to the upside. We, of course, weren't going to stick around long enough to see this thing happen. We got out early as soon as we saw that level of support hold, and of course took a 12-tick loss there on this DAX 2-step. Now, we did look for another wave short here, 448 this morning, wave short. We disqualified this trade because the flat trigger line, okay, it had flattened out right there when it tested the trigger line, and ultimately the price action was very slow. So there wasn't any real price action there. It was very slow. But looking at it, of course, hindsight is 2020. Good looking wave pattern short here, although when you looked at the market in general, not a very good time to be taking that trade. Very slow price action. All right, now let's keep moving forward here on the DAX. This is now going to be obviously after 10 o'clock here when we got back from our break. 9:30 open came and went. We had a big round number here, guys, at 5,200. As you can see, big round number at 5200. Now, unfortunately, I missed this trade, this wave short here, about 10:14. Guys, it's the picture perfect of a wave pattern. And ultimately, what was happening was I was looking at something else. I was doing some explanation on a previous trade setup, and I completely missed it. One of those situations where you see it happen right in front of your eyes, but you're just a second too late. And unfortunately, miss this trade would have obviously been a very big winner for us because it didn't slow down until it got about 20 points lower. So probably would have been a pretty darn good winning trade, but nonetheless, can't complain about it. We were able to grab another one here, 1019, a 2-step long at 87. We got 4 ticks, 8 ticks, and then 9 ticks, total of 21 ticks here on this 2-step long at 87. About 20 minutes past the hour here. That's 10.5 points. This, of course, put us back in the green in the day. Okay, so got us out of the red from earlier on in the morning, put us back in the green. And then we really didn't see much else here set up. At about 11 o'clock, we did see a 2-step short develop. We decided to disqualify this 2-step short because of the overall sentiment that we saw in the volume indicator. Now, you can't see this on your charts, but we were looking at a volume indicator that we were identifying live in real time, whether or not we want to take this trade. Boy, whether or not we completely called this thing the wrong way, or if the slow, choppy volume here kind of just disintegrated to the downside, there was slow price action, not much volume in the market, and we decided to avoid this high-risk 2-step short because of those reasons. As you can see, though, it did end up kind of hitting the downside. Looked for a 2-step long there just after 11 o'clock. We disqualified that because of 2 levels at 87.5 and 91 that were levels of resistance overhead. As you can see, though, price did move pretty well, though, up, but we did disqualify that 2-step long, 11.15, because of those levels of resistance overhead. As you can see, we go over all of our rules in real time. We show you why we take them, why we don't take them, and we'll show you guys everything in real time, so make sure to come out and join us. Now, we did take one more trade here today on the gold market. This happened 9 o'clock in the morning. I'll zoom in here for you guys as well. 9:02 this morning. Now, we had just seen a wave long set up. We disqualified the wave long because of that stutter step price pattern, which means that wave long was going to trail over into a 2-step short. 9:02 this morning. This 2-step to the downside. High risk because the news event that just had passed. We took 3, 3, and a total of 6 ticks here on the gold. We then looked for a 2-step long. We disqualified that 2-step long because we got new lower lows. And as you can see, right, the bottom just completely fell out of this gold market. All right, guys, $210 in a day for 3 contracts. Again, nothing to write home about, but as well, right, it's a summertime trade, so we're really going to be appreciative of the consistency, right? Consistency, consistency, consistency. All right, guys, make sure you come out and join us tomorrow morning in a live trade room. Opens up at 2:45 a.m. Guys, we're going to have plenty of time to ask questions, so bring your questions. We'll give you 3 weeks as part of our free trial. Want to recommend the beginner's course, and don't forget, please rate and comment on those videos on our YouTube page. Drop us an email, sales@schooloftrade.com, for more information on a lifetime membership. My name is Joseph James. Thank you so much for your time today. We'll see you in the room tomorrow. Bye-bye for now.